Hey, everybody, this is David Paul, the host of the Capital Stack podcast, where we talk to entrepreneurs, founders, and tech investors, all things value creation and startups. Today, I am with the Rei Carvalho, who is the founder and executive chairman of Wealth. Wealth is the first comprehensive estate planning platform that provides a holistic view of all your assets, which are visualized and securely stored in one place. Rei is no stranger to the startup world. He was the former founder and CEO of Emailage, which was a platform that provides transactional risk assessment by scoring email data for organizations around the world. Emailage was acquired by LexisNexis for $480 million in February of 2020. Rei, how you doing?
Pretty good. Thanks for inviting.
You're not really good at retiring, huh?
Ask my wife. So yeah, I'm a very anxious guy, and the mind can never stop. So, but nothing's
Yeah.
forced, right? Things come to my mind, and I have to follow it. Nothing. I'm not the kind of guy that's kind of looking for the next thing. I just wait for things to come, and when I feel it's a good idea, I move forward.
Yeah. So why don't you tell the audience a little bit about yourself and Wealth, and we'll go on from there.
Sure. Yeah. So Rei Carvalho, I came to US 18 years ago from Brazil. Always worked for startups, never worked for a big company, never wanted to. Background in computers, I've been CTO for a long time, very technical, both network and software, like all the areas. So I think that's a good mix for if you want to be a CTO, can't know only one thing. So I my first company here was called Phoenix Kiosk. Phoenix Kiosk based in Tempe, Arizona. We created kiosks before iPhones existed. Touchscreen kiosks, boarding pass, vending machines, those things. So that company was sold for a beer company. I worked for that beer company as CTO in Tempe, and then I had the idea about Emailage. The idea came from a discussion with a friend, and I say, how come nobody's using email as a good data point for fraud prevention online, right? So if you apply for a credit card online or want to buy something at Best Buy, those companies, they need to understand who you are before they ship the product to you, right? Usually credit cards, they lose $2,000 in average if they send the credit card for the wrong person. So
Oh,
the idea
okay.
came from there. Yeah. So people like us that don't understand the issue, but at the end of the day, if they're fraud, if a company is like a Visa, Mastercard is having fraud, or Best Buy or airlines, we are the ones paying back, right? So they lose a lot of money with fraud, and they have to raise their price to recoup that money. So it's not transparent for the end user. You don't know that exists. You don't know there's a bunch of things happening behind the scenes after you apply for a credit card or buy something online. So Emailage came to close that door of the email. Like people were using name, addresses, phone numbers, those things. And I thought email was the most important thing because email is a global identifier, right? It's linked to a person. You usually don't move or change emails, right?
Right, because
Email.
most of these fraud things are bots, right? They're, kind of like these rapid
No,
fire kind of automations,
a
right?
lot of them is fraudulent, right? A lot of them are organized crime. Like
Mm.
people there. Okay, let's get free shoes. All those free Nike $10,000 shoes, right? Sneakers. So those are organized crime, and it's all over the world, and only getting worse and worse. So that's how I created Emailage. We successfully were able to attract customers. First customers were big companies, all kind of different spaces, and then we got customers in Europe, in Australia. So we were very lucky with the company. We had a great partner. I had a team. Our team was amazing, based in Arizona. Best of all, right? So we always had the VCs coming to us trying to invest in us, even though we're cash flow positive all the time. So it was a great thing. So that's my past life, right? So I still love Image. They're doing an amazing job. They're still work with Alexis, amazing buyer. I
Hmm.
heard that they're doing amazing. The solution, the technology is amazing. Today is a network effect based. So the system scores email based on what is seen in the network, right? So it's not asking for nobody data or private data. So we sold it 2 years ago, and I've been investing a lot. You know, we invest in a bunch of companies there. At least two of us invest in one of the companies in common. But I've been investing since 17. Know a lot of VCs. I know how they always come to my office. I know the weakness. I know the touch points, the things they will say that I would say, that's not a good thing. So I learn how to say things that will create water in their eyes, right? So I will never say something and say, "Wow, that's amazing. I want to invest in you." So I was able to master that kind of a communication with them. So that's kind of what I'm using now. So I think investing is amazing. You talk to CEOs all the time. In my case, when I sold the business, I didn't stay one day in the business. There was nowhere out. Everything was, I was out of work March 17. Actually, March 18 was the worst day of COVID 2 years ago. Everybody was working from home, so I stay home like everybody. But I didn't have anything else to do. Everybody stay working remotely. So, like I said, I don't try to force things. I think everybody thinks before COVID even, oh, the world should stop for a month so I can catch up, and that
Right.
was kind of a what happened to me. Everything stopped, and I would start playing catch up with my personal stuff, and that's when I came with the idea with Wealth. Wealth is a platform for estate planning and personal financial management. um, it came from my own need. I use a bunch of banks, a bunch of like everybody. We have crypto, we have all kinds of different things. In the past, you have big banks that will offer all those services to you. So if you need something, a car loan or a home mortgage, you go to one of those big banks. Today, things are pulverized, right? So you can get a loan from other companies, you can get crypto, you can trade money. So for that reason, people was kind of lose control of what they have. Like, oh, I have crypto. I have a couple $100,000. Does your wife know? What if you die? Who's gonna
Right.
know? She knew
Right.
that you have crypto, but where is that? What is this? So
Hmm.
that's kind of where we are today in terms of
I use crypto to hide money from my wife.
exactly. If you die,
Yeah. Well, if I die, she could have it, right?
yeah,
But
if she knows about it, right?
right.
So it was like so to finish my life. I asked about myself. I actually more focus on investing. Well, I'm not a CEO. I have co-founders. The idea came from a bunch of people together, not only mine, three other co-founders, and they're the one running the day to day. I'm behind the scenes helping that company and helping other companies that I invested as well. I created a company called Bella Juju. If you go bellajuju.com, it's my ventures company, invested in all kinds of different companies like drones, all kinds of all kinds of different things that make sense.
Awesome. Well, there's a lot to unpack there.
Yeah.
Yeah, I mean, super, super interesting. Um, I guess my first question is, it seems, and I'm assuming wealth is more of a B to C, business to consumer type of application.
Wealth has we have a huge vision for the product, right? We can't disclose a lot of them, but we are starting at a B2B2C. Of course, is the end user is the consumer, but we're starting offering to as a employee benefit. So if you have a company, you offer your employees some benefits. Wealth, we want to provide you that solution so you can provide to your employees so they can have better control over their finances, better control over their state. Oh, I'm not rich. I don't need stapling. Yeah, you do need, right? We all know someone that died from COVID recently. There's always some issues with the death. Not only you're not only, sad because the person died, but also there's sadness on the fights and this and this guy
Hmm.
did this and that. So I think if you're married or planning to get married, or if you have some money, if you're middle class and above, you should start thinking about who's going to stay with my dog, who's going to get my crypto, who's going to do this. So I think for our companies, it would be amazing to give that kind of a sense of control over their life coming from the company to the employee. And
Yeah,
then
no.
that's step one. And then the reason why we came to that step, it was there are some reasons for that I can't disclose, but of course the biggest goal for the company is to get as many users as possible, and
Right.
consumer is the main thing.
Yeah, and then customer acquisition is probably a lot cheaper on a B2B to C model than just a B2C model.
Yeah, yeah,
Yeah.
it is,
So
and we know how to deal with B2B. We've done that a long time. We know how to talk to enterprise companies. Well, we're partners with the Visa, Mastercard, American Express, all pretty much all the airlines, Experian, Equifax, all those guys at my old company. So we know how to open the doors. Of course, opening the door is one step. I would say it's a little step. The second step is providing something that works, that has value, right? So
mhm,
if we were just pretty at the village, it would get us in the door. But we should not. We were not just pretty. We had essence. We had a really true value that will give companies ROI because they're checking you every week, every month, every year. So with the wealth is not different. Like you need to provide something that's compelling, that sticks with the customer, that the employees will be happy. Whoever is using it is going to say, "Well, this is very it's very useful." Not like a it's not morbid. We are not thinking about the debt or anything. Think about you having control of your life. You're in your family, and everybody's goal in life is to progress and to get wealthy in terms of family health and as well as finances. And that's kind of what we're trying to bring to the table.
mhm. Um, yeah, I mean, as a subscription revenue service, you continually have to be more than just a repository of documents. You have to continually add value, features, products, right, to have a great user experience. So, I mean, what I love about you, Ray, is that you're so driven by the market needs and not so much about like certain types of technology. You went from a kiosk company, which was hardware and software, to an enterprise software company, to now kind of a B2B to C that's got a huge consumer element to it. So how do you think about that and kind of like wrapping your head around these different types of go-to-market strategies and product strategies, going from one experience to another?
Sure. It's challenging, but it's the best part of it. I'm not the one running the business, but I'm part of the planning and before execution, there's always a planning behind. Um, I think being the background of CTO, like working with software projects many times, and we had at a kiosk company people calling, hey, I need a kiosk that will put in a pool company that will people put a water at their pool and then give me the results of what I need. So some crazy ideas, before iPhone, there was iPod, and then we were selling to Best Buy kiosk where people can buy the iPod and plug in and buy the albums, right?
Hmm.
So those things help me shape, validate and understand, projects and what will work, what was not. Of course, we wanted to sell as many kiosks as possible, but I couldn't just say to the guy, "Hey, put the kiosk on the." Someone had this idea, this crazy idea. I want to put a kiosk on a strip club. I want someone to pick the music and play it in a strip club. So those crazy things.
Who doesn't want that? I want,
Yeah.
I'm paying
So
for it. I
and
want it. I
now,
want to pick the song.
of course, but the question was, how do you pay? Oh no, you pay with credit card. Okay, but your wife is not going to be happy if you understand there's a charge in a strip club for whatever on a
Hmm.
strip, So those kind of ideas, those things, I work with the whole life working those kind of projects, like validating, working with the companies like Cisco, U.S. Army. So I'm not afraid of any new stuff, and I understand how to get there, and always coming in a way that you don't know much. Yeah, he did come from a previous successful company. Now is a completely different thing. So, what things do I need to do to make sure that we're not making the mistakes, thinking that we are the same? So, I think that's the most important thing. I surround myself with good mentors. I never say that I know everything, and I do believe that there's a growth there. And even people that already went through the B2C, if they go again for a B2C for another totally different product, is a totally different game, right? So
Hmm.
I think that's kind of it's a plus. I think also trusting the people around you, finding the best people. This is again I have my co-founders. I'm not the only guy there. I'm not running. They're the ones doing the worst thing. We have a huge roadmap, right? Like, on the product side, this is just the beginning you're seeing today. But I think once you have, okay, you come with something that's compelling. The estate planning changed the whole game, right? Like where things are not. You create a estate plan, you go to the attorney. Next day is already outdated, right? So how can I create something that goes with my life, right? So okay, I moved from Arizona to Colorado. So something needs to be done that you need to update your state plan because Colorado has a different state laws that's Arizona. So those things, people are afraid of talking to attorney, and or maybe they don't have the money, and in that case, well, of course, going to be disrupting the market. But what we are going to offer in the future is going to be shocking. I think it's shocking everybody. It will be amazing. So for me, again, we're not going to this knowing everything. Don't think
Yeah.
that I know everything. This is again new for me and for the team. But I think that the recipe would be don't be afraid and be humble.
Yeah, no, absolutely. And I want to unpack something you said, which I think is really, really interesting. And that's, talking to venture capitalists and running the gamut, having people show. I mean, I think that we all pretty much have the same talk track. We learned it in VC school about how much value we add and why you should take our money at a low price, right? And how do you pick a good investor for you? Like what's the bullshit and what's real? How do you
Yeah.
disseminate what's real and what's not?
Well, a dollar is a dollar, no matter where you get from. What else can they add besides the money, right? So if you get exactly the same term sheets, and you have to make a decision, I would say it depends on the environment. I don't have an answer that will fit every question, but every situation. But for whatever your company is needing for that particular moment, that's where you got to make a decision on. So some people say, well, look, I want to get from this big company because everybody know them will be good for me, right? So what is going to be good for you? The brand behind you? Are they going to be not probably too busy for you because they're a big company? They have many other people to deal with,
Hmm.
So some people, some CEOs I see, they want to lean towards the bigger guys, right? They even leave some money on the table or worse term sheets to go to the brand, and I think that's a big
Hmm.
mistake. So I think probably those guys can be the best, but depending on your stage of the company, a company startup, you're a different stage every year that goes by. If you're doubling, tripling, 10x every year, you're not the same company every other year. You're not
Yeah.
the same company every year. So for that particular moment, who is the best for you? So in my case, I built a syndicate in my Series A where I needed the access to Bay Area. A lot of companies wanted me to move to Bay Area. A lot of VCs say, "Oh, you got to come here. What you're doing in Arizona?" That was back in 2013.
Hmm.
So yeah, I understand that back in the day, people did not invest outside Bay Area and other places, right? So Bay Area, New York, probably Utah, or Southern California, not even Southern California, but my point was, look, I'm from Brazil. I understand there is some sort of you don't want to invest outside, and I understand there's kind of you know, I'm not sure. It was not a discrimination against Arizona, but people think, well, there's not a lot of CEOs and companies coming from Arizona back in the day. And
Hmm.
actually, the reason was because people were moving outside, moving to
Hmm.
the Bay Area because the investor put as a condition. In my case, I say, I'm not going to move it. I'm going to stay in Arizona unless you give me a reason for me to be here, right? Because there in Arizona we have it's cheaper. There's loyalty, people stay, and we have big companies in the company in the state. We have big American Express. There's PayPal. There's a bunch of people that you can get source people from, GoDaddy. So I decided to not. So I got a lot of no's because I didn't want to move. I stayed in Arizona, and I created a syndicate. The syndicate was to help me what I most needed that day, which was to get data, open doors in big companies in the Bay Area, like data companies like a Google, Yahoo, or this guy. So I handpicked each one of those people. We got guys from LinkedIn, Google, Yahoo, CTO for Yahoo investing in us. So that was great for us to expand the business for that particular stage. So the companies that say no to me because I didn't want to move to the Bay Area. Then they crawled to me, say, "Ray, we're investing now in Arizona. Please give us a space." So it was. I never close the doors. I always say, "Okay, I get it." Maybe there was a mandate for their stuff. So
Right.
for their fund. So that's kind of the story why Arizona was the best place. We never needed to move anywhere, and we thrived in Arizona. And that's why we have wealth in there now.
And so when you did when you did your Series B, that was Anthos Capital out of Los Angeles, right? And that was they're Santa Monica based, real kind of stealth VC firm. I was just talking to Ed Wilson the other day. He's starting a new fund, and he, it was very, very like, generalist fund. They do stuff outside of software, very, I think they've done like energy drinks, restaurants, anything that makes a lot of money. But I believe they have a really great track record, and they invested in wealth as well, correct?
So we weren't actively fundraising for Series B. Of course, I was afraid of some sort of a market downturn at that point, because I was always involved with the VCs. They always, I used everybody they wanted to come to the office. We could let's talk. Every time that we had an event, we will always sit down with these guys. I'll give them an update and not giving too much about the company, but they will all be super excited, right? And then my other side, the reason why I wanted to play that game was not against the VC guys. I know a lot of them now, but for me, it would be a lead generation. I'll tell the VC, look, I don't need the money. Would you take your money if you were me? Like a lot of them said, no, of course, maybe. So I'll tell them, well, connect me to one of your company, and I will usually go to their site and see that they invest somewhere. And say, hey, open the door for this guy, connect the CEO. I want to talk to him, and then we connect our teams down there. Then they start using us, and then you ask them how we're doing instead of asking me. So because if you might get a biased answer from me, but then you ask them because they are now our customer. Another reason why I wanted to talk to them, so that worked well, would be for if they believe they were investing in us, they are not going to invest in a potential competitor. So if they believe there is like a Rei's doing amazing, he's probably going to say yes to if I provide him a term sheet. And if they believe that if there's a second player, kind of shielding them from going there, right? And a third thing is I believe in the positive talking, right? So people see that everything is positive. You like the way the company is doing. If you're giving them something, and that's going to be spread out. It's harder to spread positive things. I know it's harder than bad things, but it does spread out really fast, especially on the VC side. So for that reason of my talking to them and opening the doors, they were helping me all back and forth with other teams, not only leads. I got a bunch of preemptive term sheets for my Series B. So I was telling guys, I gave you something, but I'm not fundraising. And then we got more than 5 preemptive term sheets. And Anthos, I got to know this guy. I say, who the fuck is Anthos? Who are these guys? And but that's how they play their game, and that is still today. And those guys are the most aggressive, the most, they brought so much value to the business. It was not only Anthos and Radian Capital. Radian is Jordan Batman that started from, he was the youngest partner at the Bain Capital in New York. So I say, well, look, Anthos came with me, this super open-minded thing, but with a lot of different things they're going to bring into the table because we need maturity. And it was not about the money. Also, it was not about the branding. So we had some huge companies coming to us with term sheet. So I say no to all of them and went with Anthos because I believe that they told us what I wanted to hear. So sometimes you get people say, oh, I can connect you to this and that. So connection wasn't that important to me anymore because I already had a bunch of them. But what else can I be doing that I can take the company to the next level? So people talking about repricing, talking about expansion, talking about sales strategy. So that was the thing that I wanted to hear at that time. So when I heard those things from this guy, I said, well, these guys are the best. And then that was it. These guys, today, I'm LP in their fund. They're not into putting out their PRs or anything like that. They're behind the scene. They say, well, Ray, you don't need to do PR if you don't want it. We don't care. Right. So the guys from Goldman Sachs, Paul and Brian Kelly and Paul Farr, brilliant guys. They are just running the right company, and they, like you say, they invest all around. If they believe in the company and the product and the founders, they will invest no matter what you do. One of the companies they invested on now is a temporary tattoo. You make a tattoo, it lasts for a year. So that's just crazy stuff that they do, and that's nice.
Yeah, they're for sure out of the box thinkers. So yeah, I mean, I totally concur. I mean, everybody touts their network, right? And at the end of the day, I can't force a portfolio company of mine to buy somebody else's software, right? All I can do is just introduce, and so the network thing is, I know it's in the connection. It's probably the thing most talked about, but one of the things that probably is not at the end of the day the most valuable after close.
The most valuable thing you can get is word of mouth. Like I think when you talk about network effect, everybody says that today, but in our case, because we're working with the scoring, it's just like a credit scoring. There is a network effect in credit scoring. We had a network effect in our risk scoring as well.
Mm-hmm.
In our case, the word of mouth where you provide the service to Lyft, and then you know that Lyft, if they're successful, they're going to talk to just example companies, right? So they will talk to others that will also want it. So I think getting the door from the above is great. You're going to connect, but it doesn't do everything. Like because usually, typically, people are busy. They have a lot of vendors coming to them all the time. So coming from the top give you the open door, but the biggest thing is like, guys, we work with the 90% of your space. We work with all those money transfer companies. You're the only one outside of it. If you're the one outside this network effect, you're the one that frauds are going to most, right? So, but anyways, I got a lot of help from VCs. So I learned a lot from them in how to help other companies, how to help other CEOs. There are VCs that talk to, like I said, like Anthos and Radian. They come and say, well, Ray, at your stage now, I believe you have these problems. And that was great to hear. It was not like a generically speaking, oh, we have this network and we can help you here and there. They will say, oh, look, these guys are in this stage. And I think this stage, because I know you and I know this companies in this space, I know fintech, I know fraud. I think for you to get here to there, you got to do all those things. And then you say, wow, that's great thing. That's great insight. And that was actually the reason why we say no to everybody. Say it went with them.
Mm-hmm.
And at the end of the day, after closing, it's one thing is telling you one thing, the other thing is executing by helping us get to where they told us we should be. So that was all brilliant. The way that they act, they were extension of the company. They work with my C level. I think some people on the C level might think that, oh, this guy's gonna fire me. They kind of get insecure, right? Okay,
Mm-hmm.
we're bringing these guys now. They're putting money. They have their own people. I'm not sure. There's two ways people can think. I'm a C level, and might think, well, look, it's great. It's going to be added value to the company. We're going to use this guys. Oh, he has a CRO helper. Let's talk to this guy to help us with the pricing. And there's the other guy that would say, well, look, I don't like it. I make the decisions. Don't get away from me, this guy. So I try to avoid those things. I'll bring all my C level to all board meetings. And my CTO will talk to one of my investors, CTO, every month. And I will ask him, if you don't see any value, let me know. Just tell this guy to go away because we're not seeing value. And that never happened.
Mm-hmm. They were always able to bring it.
Yeah.
So how important is it to you at Emailage when you were selecting your Series B investor that they were former operators and CEOs versus just venture capitalists?
You don't find a lot of those even CEOs that already had successful companies. They haven't gone through a successful company on the fintech, on the fraud space, the super
Right.
fraud space
Right.
that's based in Arizona, that's global.
Right.
That sales is
Yeah.
for.
Right.
So everything's different. Like some people say, "Wow, this guy already found it." Like myself, oh, because I did well with the millage doesn't mean that I'm going to do well with the wealth, right? So I think it's completely different things, completely different behavior. I'm learning a lot still, even though I'm not operating the business. But I do believe that cutting corners is important. If you get somebody that can tell you you may have problems here, you gotta be careful with scaling because everybody says that. Be careful. Are you ready with scaling? And you get afraid of scale. Is that a bad thing? Is that a hard thing to go through? The scaling, I don't get it. But they should be saying scaling is the problem because if we go from 10 to 100, there's going to be political issues internally. There's going to be all these people. One day is amazing. The other day, everybody wants to leave. There's problem with your co-founder. So I think it does make difference when your CEO can provide you that kind of information because for a CEO, for some founders, you spend 20 hours of your day and no weekends working for this company sometimes affects your family and even your health. And I know a lot of CEOs that's kind of, Ray, you told me something and that I'm going through it. I didn't want to talk to you because they don't want to open that with a VC because they're insecure to say that as going to be a weakness on his
Weakness,
side.
right?
So I
Hmm.
will automatically, when I talk to the CEO, say, well, look, you may have a problem with this and this and that. Yeah, Ray, we're having this problem. I didn't want to say, oh, there's guys killing me at that glass door. What do you do? Okay, hold on.
Right.
Focus on your doing good stuff. Those guys are going to go away. Don't reply. Let them stay there. If it's a mistake, try to fix it. If you were too hard on people, don't be that way. Be nice. So I think it's not a recipe. I think being a CEO as a VC and automatically being adding to you more doesn't mean that you're going to get more than somebody that hasn't operated a company before.
Sure. No, absolutely. So now you're executive chairman. You're working a lot with strategy. Is it hard for you to let go of the reins on the day-to-day operations and not being the guy?
Well, I trust the people that we have, so I worked with them in the past. So it is. I think when it's just like the reason why I sold my business, I didn't stay one day with the business because I had a decentralized company. It was not all on me coming in. And when I say that, it's not just certain things. The way I would run the business would be, guys, you're still level, you have your own stuff, a plan with your team. Bring to the management meeting. We agree with everything, talk to the board, present that quarterly. The quarterly report goes from all the data you collect and present to your people. So there's no surprise to anybody. The data that you collect all the way down the bottom, your tech support guy already know what the plan is of hiring next year. You bring to the management, everybody sign off. And then you bring to the board, everybody sign off. And then you bring it back to the company and say, hey guys, this is the plan for the next year. So it's clear for everybody in a way that I wasn't the one presenting sales. I wasn't the one presenting this and that. So when the buyer came, they understand that the Ray was important building the team, but we can survive without him because all these people know what they have to do, and all those things. So I think I believe in that concept, and so that's what we're using with Walt. I'm not the central part, of course. One of the guys that came with the idea, but in the vision, because we have some steps to go through. But I truly believe in the team that I have. It's just like a VC. If you invest in a company, you gotta trust the founders. I hate
100%.
those VCs. I don't think they exist anymore. But the VCs that will replace CEOs, they say, okay, if you fail a few times, you're gonna be fired. That shouldn't work today. You can't do this kind of a heart transplant. So you should invest on the founders. And then understand that they have the skills and the power and all the stuff to do whatever they told you they're going to do.
Yeah. Yeah. You can't replace a founder. I mean, I've come to the conclusion from doing it wrong previously at other firms is that, it's just not worth it unless the founder is like literally doing something criminal, right? Like, like sexually harassing like an employee or, like being violent or something, because the problem is the company's not usually at that stage super valuable. Right.
Right.
And you have to have somebody that's so incredibly, and not to mention like just the inhumaneness of doing that and like, killing someone's baby. Right. But
Yeah.
you just do, there's a misalignment in incentive, right? When you pull out a founder, like who's going to work that hard? Right. And all the talent is either an early stage or late stage. There's no one that really wants to run like mid-market companies or without like comp not being completely out of whack.
Well, there's always going to be those missed, you missed on the diligence, all this stuff. You believe that the person was one way or the other. It's always going to happen that way.
Right.
But I think the premise of a VC should be those guys are amazing. They have a product and there is a market for the product. So those guys are amazing and did all this stuff. I asked all the questions I needed, and I invest in these guys to do what I believe they can do. They got. If you talk about growth, these guys got the company where it is today. You talk about early stage, yeah, I don't know much. They still have a lot to prove, but it still needs to be on trust of the founders, right? Try
Mm-hmm.
to you're gonna miss some, but I think the trusting what they can do is like you can invest, put money in somebody's hand. if you have a slight, I don't like something's on this guy, and you're
Yeah.
still going forward with it. That's your mistake.
Yeah,
Is
no,
it?
that's 100%. And you're like, oh, but the growth, oh, it looks so great. Look at the margins. But the guy said something that's a huge red flag, and it's shame on you at the end of the day because
Sure.
everything comes out in the wash, right?
Yeah.
So now you're a venture capitalist. Tell me what's exciting you right now in the marketplace. What are you looking for? Kind of like what's your check size? How do you think about all that?
Sure. Yeah, we invested last 14 months about $20 million. I
Wow.
don't have, yeah. So it's kind of a aggressive. I'm very anxious. Like I say, I wanted to move as fast as possible. I think, but of course, I'm at the same time I'm very critical. I don't do any. I try to not do any mistakes. Make sure everything is, I'm not leading anything. I'm following people that I trust. So
Hmm.
I have a lot of investment in funds. I'm connected to all my investors, like as an investor in them. I invest back on my investors. So that's how I love these guys. But also very proactively looking for good stuff. Right. I'm not investing in fraud. I can't because of my deal with the previous company. And my background is not in fraud at all. So my background is in computers and science and those things. So in technology. But if I come across and it comes from somebody that I really trust, that will do amazing diligence, that will see those things that I told you about, that will see in the eye of the founder, that's going to be a great company. This guy has great ideas, and then he has all the stuff that can execute the business. I will just follow those companies. So there's a lot of things that's happening in Brazil. Like I say, I'm Brazilian. There's the fintech exploded here, started 10 years ago or more, a little bit more, and then Europe, and then later in Southeast Asia and in South America, including Mexico. So those guys are behind. So the explosion that we saw here is happening there. So it's good to be there when things are exploding. And I talked to a lot of CEOs there. I participated in one of the funds there, but I invest directly. I'm investing in a drone company. Like I'm leading the Series A for that drone company. We're launching this week. By next week, we're gonna close the deal.
That
Uh,
company's in Brazil.
huh?
That company's in Brazil.
Yeah, it's called Speedbird. Speedbird Aero. So they're the first to have a license from the government. Usually, drone companies they're great. Everybody wanted to invest a few years ago, but then today they're still in the hands of the government to allow those drones to fly.
Hmm.
So that step they passed, being the first one in South America to get and they're already flying, they're delivering stuff, and we are now selling more and more drones, taking orders and building. And we build the drones there. All the IoT, everything is there. It's all automated, unmanned drone. So it's an amazing. I know the founders, so I know what they can do, and I know the market. Brazil is hard on logistics, and it's huge. 200 million people. There's a huge need there, but the product can be also global. They were just in Israel. They just got a certificate in Israel. So I'm all over the place. So it just needs to make sense. I'm not promiscuously putting money, deploying money. It needs to make a lot of sense. And I guess I'm using a lot of my trust in my co investors.
Yeah, no, it's always good to, go along because they see a lot of great stuff. I mean, they're in the business of looking at stuff and, a deal is only looks as good as the stuff that's around it.
Yes.
But I see a ton of influx of capital going into South America.
Hmm.
It's great.
Yeah, look, I saw when, like I said, the companies were investing, mostly companies in Bay Area, New York, and then that expanded because there's so much money in the VC world and PE world. They had to go outside of their norm, right? So then they start coming to Arizona, investing companies. They start expanding outside of those areas, and then now they're going outside the U.S. because there's so much money available, not a lot of deals. Everybody's looking for that gold nugget. There are amazing companies outside there, and like I said, they're not. A lot of times they're not doing something that's genuine from a problem there. It's actually things that happen here. They're copying and it's happening there. Payment processors, right? All kinds of different things that worked here, and then why can't it work there? And you can see a lot of opportunities there happening this way. So a lot of companies, they invest in companies here this way, like a Zipcar, and then there's the same Zipcar company in Brazil called Torby. So if you work here, why can't I work there? Look. So I believe that not everything can be transplanted. Every country has its own stuff. There's the regulation side of things and all this stuff. So I cannot be dumb enough to think that something's going to work here is going to work there. So I have that kind of a angle that usually people don't, because I'm Brazilian. I was raised there. That people can say, "Oh, let's go to Brazil. It will be easy as here. They don't have the
Right.
technology. It's not going to work that way."
Yeah. I was talking to a venture capitalist yesterday, and he was telling me that, specifically later stage SPAC type deals, that he's going out and literally for a financing, like selling IP and licenses and royalties to the Chinese as a way to finance the company. Because they're like, you're going to rip it off. They're thinking is like, you're going to rip it off anyway. Why don't you at least sell it? Right. So, and they, they correlate that with, a pipe, and they put that in the SPAC, and then they get this royalty from the software.
Sure.
And I was like, God, that's like kind of like selling to the enemy though, isn't it? It's against like the American capitalism.
That's the only way to get in there. So yeah, we
Yeah.
had some customers in China, and like they use it for some time, and they go away and do their own stuff. So
Yeah.
it's tough.
Absolutely. So, I try to keep this as an evergreen type of show, but I think I would be remiss to say that we're just finishing the first quarter of 2022, and there's been a great big pullback in the capital markets and growth stocks, and in the repricing of that. There's a lot of uncertainty with the war going on in Ukraine. How do you think about that when you're investing in early stage and going from a zero interest rate environment to a higher interest rate environment, and calculating multiples?
Yeah, look, as part of your investment, you got to understand there's a bunch of things. You won't see everything, but one of the things you got to understand is, will this company survive on a downturn? Like, if not, uh, like, might not be a good way for you a place for you to invest, because anything can happen. It may happen, may not. Like a bad thing, like in 2008. Phoenix Kiosk, the company I had in Tempe, went through the 2008 crisis. It was not easy. Companies calling, say, hey, we're going to cancel this and that. So, however, I believe that if you do believe the company can survive, and whatever research they have, a downturn can pose as an opportunity, right? You maybe there's going to be a cleansing on your space that people can't. Those companies that are trying to compete with you go away because they can't survive, and then if you are surviving, it's 10 times better for you. And when the market goes up, you go up with the market. So I believe there's an opportunistic view of this kind of thing. I think this kind of things. I think VCs are having this kind of thinking that the same way. I think there's a lot of money in the space, but they nobody's putting money to lose it. They gotta make sure that the company will be
Yeah.
successful.
Yeah.
You
Yeah.
know?
Nobody's in the business of losing money. Right.
Yeah. So, like an example, Brazil is in a recession. It has been in a recession for more than 5 years now. That's another reason for you to invest in there, because now you're going to on a place where things are really low, and hoping that things are going to get better at some point. So I think that can be, like I say, I see that as an opportunity, but I don't think that's a bad thing. As far as companies raising money, there's still a lot of money committed to VCs and PEs. I don't think that money will go away soon. I think I see companies raising 500, and they wind up closing at the 1 billion on their funds. So it's still a little crazy. But when those things happen, you cannot just be a company that would be nice without having a clear path of how to mitigate the issue. I remember one company in Arizona was going through some sort of issues like this, and it's nobody has crystal ball. You gotta make sure that you have a product that can be profitable. You can have a plan of attack if you lower your costs with people and resources. How can you go through all 12 months, 24 months of in a guerrilla mode? So I think those things are you know one thing that I don't believe in is like, oh, you gotta retract. That's kind of a one thing that I did for my Series B. I was afraid that the downturn was going to happen at that point because it was 10 years. And then I said, well, look, I'm afraid, so I'm not going to open Singapore or Australia, or not taking those investments. So you can't run a business based on what you think is going to happen in the future, because it may not never happen, and then your competitor will pass you, and then bye
Right.
bye for you. You know.
Yeah, you can't have a mentality of scarcity, and you can't not invest, right? I mean, the opportunity cost is too high.
Right.
Um, so I think wealth is super exciting. How I kind of think of it, there was a company, I'm not even sure if it's still around, but it was a really cool company. The business model, I think, was a little like bait and switchy, but do you remember Personal Capital?
Yeah.
Where they integrate with all your banks and your brokerages, and they would give you like a comprehensive dashboard, but then you'd get a call from a guy wanting to manage your assets.
Yeah. So we work with banks data. You know, if you're working with big banks and airlines and big companies, they're providing their customer data to you. So you got to be careful what you do with it. Super secure, never sell data. Wealth is the same thing. The people that we have in place, they understand that we'll never sell data. We'll never sell ads. We're never going to be the company saying, hey, we see that you have a Capital One card. Here's a Citibank card with a lower interest.
Right.
We'll never be that kind of company, right? So one of the things, the reason why we have wealth.com is the trust factor. So when you see there's somebody investing money in that domain, you have a company called Wealth, and you have people that we hired that will take care from day one, how you encrypt the database, how are we gonna provide data back to the customer. So we will never that kind of a situation where you explain about personal capital is like okay, I want to use this, and then they reuse the data for their own benefit, to sell it or to sell their services. But
Mm-hmm.
we will never do that. And
It's a bad look, right? I mean,
it is like
yeah.
it is not, but it's not something new. Like you have companies where give you credit score for free, but then you get ads and all this stuff, and then they know your credit score, and then they show you the credit card company that will accept you, and then you click there, they make some money. So nothing against it. The companies survive, and they're big companies that live from there. But our goal in the wealth is to make sure that we have Chris's trust factor, because now we know their family, we know his state, we know his wealth, and we will never do anything that will compromise that trust. That they say, "Well, look, I have all my stuff here. I know I'm taking care if something happens." And wealth that we're going to go to hand. They're not selling me this and that. So I sincerely think for us this wouldn't work.
Mm-hmm. Yeah, no, absolutely.
Yeah.
Absolutely. That by the way is a monster domain purchase. Wealth.com. That's pretty serious. Good job.
Well, yeah, I think we couldn't come across a better name than this. And
No.
the domain was available, so we had to go through the process of purchasing it, the painful process of purchasing a domain. And but it is what it is. I think hopefully, I don't think people will use services because of their domain. You got to have a quality. You got to have
Yeah.
something in it. I think that's we know internally. As you can see, we're not talking about the wealth.com much. We're even talking about ourselves as Wealth. Our company is called Wealth Inc. So
Mhm.
yeah, it's an amazing business space is amazing, because there's trillions and trillions of dollars passing from one generation to the other, and people more than ever need some sort of a visibility, control, and generations. There is taxes, there is insurance, all this stuff that we wanted to make sure people are seamless, like without having to do a lot to have full control of their lives.
Awesome. Ray, thank you so much for coming in. We'll definitely have you back on the show when wealth unicorns. Should be what, like 18 months?
We'll see.
Yeah. Okay. Everybody, thank you for tuning in to the Capital Stack, where we talk to entrepreneurs, investors, and operators about all things value creation and startups. If you like what you heard, please subscribe. We're on all the major platforms: YouTube, Spotify, and iTunes. Just type in my name, David Paul, or the Capital Stack, and we'll see you next week. Thanks. Bye-bye.